It's all the buzz on Wall Street and on Main Street. The stock market continuing to climb, breaking records and leaving many to wonder just how long will this run last? Omaha's retirement strategist is here to talk about it. Darrell Bryant is one of the area's leading financial advisors. He joins us every Monday morning to help us plan for retirement. Darrell, it's good to see you today.
Great to be here.
Sharp dressed. Are these your airport clothes?
Yes, these are mine. No, I said, well, what is Mary wearing today?
I know.
So, yeah.
You thought you would match. It is a nice jacket, perfect maybe for New Orleans.
Yes.
Are you heading out soon?
Heading out to New Orleans. We have a opportunity to interview some classic rock artists pretty regularly. Doobie Brothers, Sammy Hagar, Peter Frampton, et cetera, to name a few. And thankfully, tomorrow night I'll be interviewing the band Chicago in New Orleans. And so we'll pre-record that and then we'll throw it on the radio show here in the next couple of weeks or so.
That's really cool.
Really quite an honor to do that kind of
I said before the break you like music, but you're a super fan.
Rock.
Yeah,
I love the classic rock. It's just been, every time we do these, we stand there and say, how did we get here to do these interviews? You know, so it's awesome.
Well, I'm going to interview you. I'll play Darrell Bryant in this scenario.
Let's do it. Okay.
Because last week, I don't know if you were watching, but we talked about this extraordinary bull market.
Yes.
Following up on that, because there was still quite a bit we couldn't flush out completely. The reality is it can't last forever.
No.
We'd like it to, but
Sure.
it just can't.
Sure. Well, the market's moved forward, very consistently over time, but there's always those drawbacks, right? So right now, if you're an investor out there and you are trying to be a market timer, be careful. Are we bullish right now? Yes. Earnings per share are up right now. We have unemployment is down. The Fed just moved interest rates forward. These are all indicative of a strong economy. So as long as the economy stays strong, we believe that on the short term, meaning the next year or so, we'll see our domestic stocks moving forward. So that's a good thing. That is in the event that we don't have some sort of a black swan or something come out of nowhere, some political event or something like that. So anything could derail, but the fundamentals right now look very strong for us to continue marching forward. That doesn't mean we won't have a little setback and then march forward like usual, but so I'm not too scared of stocks right now on the mid to short term, meaning 6 to 18 months.
Do younger people need to think about investing differently than older people right now?
Great question. And so with that question in mind, I brought our little prop here. And
Okay,
so
I wonder where we were getting to the buckets.
Yes, we're going to get to the buckets. So as you can see by these buckets, what I brought a bucket that says my now money, my later money, my never money, and my taxes. Well, we might have to do taxes here next week. So let's hit these first three. So the question you asked was, how should a younger investor, have more money in the market, an older investor maybe not, et cetera? How do you do that? Well, it's not so simple as these rules of thumb, but it is this simple. Here's the thing. For the dollars that you need now, it would make sense not to have those exposed to risk, right?
Yeah.
Your now money, okay? And if you're retired, there are definitely some dollars that you need to have loose right now, right? But for the younger investor, the guy that's 45, well, he doesn't have a lot of now need, does he? Right?
His later need's greater.
Right, so his later need is greater, so he can have those dollars invested where we have some upside potential, and he's not so concerned with market volatility in the meantime. Yes?
Yes,
you follow me?
I do.
Okay.
I'm looking at never.
Yeah, okay. Then you have the never dollars. Now this is going to get into, a lot of our clients will come in and they're very, very well funded. We can calculate that they're never going to use these dollars. They've overfunded themselves for retirement. It's a fun thing to tell a client when they come in. We've calculated where you are.
What a luxury.
You're asking for $100,000 income. I can calculate that we could throw some dollars right out the window and you're never going to need them, right? Well, this can be the crown jewel of your retirement plan. In other words, when you pass, and you will, Mr. Retiree, one day, wouldn't it be nice to leave an inheritance to your children and avoid putting anything ever in terms of income? Don't put an income tax burden. We don't want anything to ever go into this bucket, which is the taxes bucket. So now money should be safe.
Yeah.
Okay. Later money, well, we'd want to have some upside potential with that. So we'd want to be market sensitive with that. Never money, we're going to get creative with that. And we're going to create an inheritance for our children and have them ideally never have to pay taxes, even income tax, right? You don't want them to have to come out of pocket to pay income tax, for example, on IRAs that weren't needed, et cetera.
So what should your risk level be when you're nearing retirement, or you work with a ton of people who are already in retirement? What's the risk level like?
Well, it's going to vary from one client to the next, of course. The risk, there's the risk tolerance, but then there's also the risk requirement. But again, the main thing we want to try to do is identify those dollars that we do need now and keep them safe. So regardless of your age, we would always want to have some dollars that we need now perfectly safe. And that bucket is going to be more full for the retiree, isn't it, than the non-retiree.
I think I just heard safe twice
yes.
in the last
Safety
few sentences. I'm like counting safe, safe. So what are some examples of safe investments that might not be away from the stock market? What are you pointing people to?
Great question, because there is a big hullabaloo over annuities. All right, now let me tell you something. It begins to get a little irritating to me. What if there were a product out there, because there are a lot of shiny lures, Mary. The people are chasing after retirees' dollars all the time. And so I'm listening to the radio the other day, and you hear you see online, et cetera, indexed annuities are very expensive, et cetera. What if there were a product that last year had no fee to enter, had no annual fee, had guaranteed principal, guaranteed by the full faith and credit of the issuing entity, which is a high-end entity. You would know the name if I called them out. Okay, no question about it. No fee, no entry fee, no annual fee. Last year paid about 11-ish% rate of return, and your principal is guaranteed by the issuing entity.
So I don't hear any risk in what you just said.
As long as that issuing entity, which by the way is bigger than McDonald's, bigger than Starbucks, bigger than Nike, okay? This is a large company, right?
I get that.
That is standing behind the principal. Okay, it's a wonderful vehicle. So for somebody to say all annuities are bad, listen, that could never be. That's like saying all mutual funds or all index funds are bad. It's just a silly thing to say, right? So there are varying degrees of value in any market. The trick, if you're the consumer, is to identify who you could speak with that will tell you the straight story and not try to promote a particular agenda, right? And then be able to shop the top level products.
You might be thinking, well, how do I even know where that person's coming from? Are there important questions that I need to be asking? We've covered that with Darrell before, but we've got this offer right now. If you want to sit down with Darrell's team, have them look at your portfolio schedule, a complimentary retirement consultation, you can do that today. But his office books pretty far in advance, so this offer is limited to just the first 5 qualified callers. And the number is 402-932-2141. And again, that's for a complimentary retirement consultation. It's 402-932-2141. Also, DBryantRetirementStrategies.com.
Yes.
That's awesome.
It is.
That deal, because I feel like a lot of what you're saying, people go, yeah, but what does that mean to me? That's the sort of place where you find out what it means to you, and then you march forward into retirement with a ton of confidence.
A lot of confidence. Listen, for those viewers out there, don't be intimidated. Just give the office a call, throw your stuff in a box. You don't have to know anything any more than you have to know something before you go to the doctor, right? That's why you're going. Throw your stuff in a box, you make a phone call, we get you on the schedule, and we'll get you squared away.
Safe travels.
Thank you.
Look forward to hearing that interview with Chicago. Darrell Bryant.
Yes.
Thank you.
Thank you.
Guests